Hello and welcome to interest.co.nz. I'm Gareth Vaughan and I'm joined by Geoff Bascand, who's the Reserve Bank's Deputy Governor and General Manager for Financial Stability. The Reserve Bank today, of course, released its biannual financial stability report. Geoff, look, thanks a lot for your time, really appreciate it. One thing I noticed, just looking through the report, the word uncertainty appears 11 times and unprecedented 5 times, which probably sums up the sort of world we're in at the moment pretty well. I guess the sense is that none of us really know how this COVID-19 crisis is going to pan out, including you guys. So, I mean, is it fair to say you're really having to, fly blind a bit at the moment?
Well, uncertainty is absolutely the key phrase. And when we did the monetary policy statement sort of a couple of weeks ago, we deliberately portrayed scenarios of the economic outlook, saying we didn't have enough confidence or certainty, if you like, to pin one particular set of forecasts down. And the financial stability report's a bit the same. It's actually what it's doing is saying, let's think about how the world might turn out, and what if it turns out more badly, or worse than most people are sort of hoping. Then how robust will we be then? And so our job is to sort of consider the possibilities and prepare for the worst in many ways. The most probable scenarios, things look fine. Our banking system looks good and will withstand, but we can't just sort of hope for that. We have to anticipate that it could be different, and so you described absolutely a world where we're not sure at this point. Best to think about a range of possibilities.
Absolutely. You referred to stress testing of the banks that you've been doing today. You've obviously done stress testing of the banks for some years now, sometimes in partnership with APRA, the Australian Prudential Regulation Authority. When you've done this in the past, pre-COVID-19, have you ever run pandemic type scenarios in those stress tests before?
Well, funnily enough, they've tended to be more epidemic, if you like, or foot and mouth type scenarios, really, than full-blown pandemic. But yeah, we've had SARS in the past, and we've had thoughts about these things. But this is a real live one, not just a. It's a stress test about what could happen if it's more prolonged, if it's more deeper. If we get second round, if you like, or waves of this, you're sort of thinking about those possibilities. But at the same time, I mean, it's still with us, and we've got an extraordinary economic shock, a health shock, and then followed by an economic shock. So it sort of makes the stress test pretty real in that sense. We go to a darker place saying, what happens if it gets even worse? But still right now, we've got one of these, and we're hoping our system and expecting our system to be strong enough to ride through it.
What sort of levels of communication have you been having with other central banks around the world during this period?
Yeah, it's an ongoing practice of ours to talk with them. Others are doing their financial stability reports. The Reserve Bank of Australia issued theirs with some stress test results earlier in I remember it was late April, and we talk very with APRA, of course, as well. So it's really important to get broader perspectives, and we talk with banks in the industry. So the ones we've published today are desktop results, so ones we've done in our modelling. At the same time, we are in a process where we've asked the 5 major banks to undertake tests themselves, and we will discuss those with them over the coming month or two and compare their results and then publish some more information in due course.
This morning, Reserve Bank Governor Adrian Orr said there's scope for further mortgage rate cuts from the banks yet. This is a theme, obviously, that yourself and Adrian and the Reserve Bank in general has been pushing for the last few weeks. I'm just wondering, do you believe banks actually have an appetite to lend, I guess, to new clients in this environment?
Well, I think it's also an appetite to lend because that's their business and that's how they make their money. But yeah, they've certainly tempered that a little bit by uncertainty over how strong businesses' cash flows are, and whether households have got the debt servicing capacity to pay the loan if unemployment strikes and so forth. So we're in a slightly uncertain period, which probably is both dampening credit demand from the demand side, but also maybe from the supply side, making banks just to run the ruler over proposals a little bit more. We've seen mortgage rates come down quite a bit recently, so I think they were also uncertain about their funding positions for a while, and weren't quite sure what the cost of that would be or how much they would have. They're actually finding they're quite well funded right now because credit demand's been so low. So those competitive forces are just starting to take shape a bit more. But I think also in your question is new customers versus existing customers, they prioritise existing customers first, and I think that's operationally they're challenged by the sort of amount of time it takes to restructure mortgages, restructure a business loan. So they've been focusing on that before they've been going for that search for new customers. I think what's really important is how they support the recovery as it starts to get a little bit more certain. Now's the time we expect to see credit growth just pick up a bit and the competition to take hold. So a long answer to say, I think it's just coming, is more of that competitive spirit.
Are you seeing increases in non-performing loans already? And if so, are you seeing this in any particular sectors?
We've seen a bit of a tick up, but it's early, and sort of there both arrears have picked up a bit and provisioning, if you like. So we expect it to deteriorate further as more of the economic pain sort of becomes before us over the next 6 months. I think there's an element which, to a degree, that's slightly deferred and cushioned by wage subsidies and so forth. And it's been a couple of bad days with some unemployment announcements by hotel chains and other things. So I think a bit more of that to come. But some signs, but not really sharp at this point.
Obviously, the loan deferral arrangements are in place with mortgages, either interest only or full deferral of repayments for a period of 6 months. Just wondering, what will drive the Reserve Bank's decision to ultimately say some of these loans have to be treated by the banks as non-performing loans?
Well, the rules that we sort of agreed with the banks were that if a loan was performing at the start of COVID, then it could still be just performing for 6 months. So they will have to then, those loans sort of have a natural sort of review date, and we call it that, at that 6 month. So then they'll have to, they didn't actually put them all on 6 months. Some of them went for 3 months, 4, 5, 6 months, it depends, but they could do it up to 6. They will have to go through those and actually say, are we confident that those are still performing loans and are going to keep performing, or is that loan status changed really? So in many ways, it's actually with the banks to make that review call at that time.
Obviously, much of the focus has been on borrowers, but obviously there are savers out there too, and their deposit rates, certainly from banks, are really, really low. I mean, how low could deposit rates go?
To zero, I guess. We don't really anticipate negative deposit rates. It has happened in some places in the world, but what we've actually talked about with the banks is only at the wholesale or interbank level, sort of having negative rates. At the retail level, keeping them, expecting them to be floored by zero. So the deposit rates have been declining, and that's part of what we have to do in a monetary policy sense to reduce the cost of funds to banks, so that they can reduce the cost to borrowers. And I guess it also encourages savers to look at other areas to divert those funds, reduces the cost of equity if they shift their funds from a deposit into an equity instrument, pushes up those prices and reduces that cost in a different way to the equity funders. They could put it into other assets and things like that. So hopefully see that saving used closer to the supporting the economy.
There has been a build-up of deposits that's gone on thus far, and I guess it's not just in New Zealand but overseas too, and that happens when people are uncertain. They do tend to save their money. I mean, are you encouraging some of these depositors at least to put their money to use elsewhere?
Well, I think that's one of those choices that savers have to consider. I mean, what we've said for quite some time is we expect interest rates to be very low for quite a period of time. This is not just a short dip and we suddenly see interest rates go up. We think in this circumstance, it takes quite a while for real growth to pick up, let alone inflation to pick up, and there'll be quite a lot of surplus capacity in the economy. Unemployment, other resources not fully utilised. Capital that could be is sitting a bit idle. So it takes a while for any likelihood really of interest rates to rise. So if you're a saver, you got to say, well, do I just accept that? You've always got to mix up the safety element, how much I want certainty of my savings being there, which is why you might keep it in a term deposit or a bank. Versus how much I need income from it or a higher return, and I might get a higher return somewhere else. So they're going to have to make those portfolio choices.
The Bank for International Settlements recently noted that lockdowns around the world with financial services sector staff working from home had increased the scope for cyber attacks. In the FSR Financial Stability Report today, you note that the banking system has not been affected by a major cyber attack to date. I'm interested in the use of the word major in that sentence. Does that imply there have been some minor ones? And can you give any details on perhaps what there has been?
Look, the financial institutions, including ourselves, if you like, are always subject to some sort of endeavours at an attack. What you worry about is when they get really sophisticated and large scale. I suppose that's what we're calling major, as opposed to your local community sort of attempt to sort of get in a back door or somehow. No, we haven't had. We've been encouraged. We've been talking with the banks and discussing this with them as to what extent this sort of change of circumstances has heightened the level of attack, or either in volume or sophistication. And what they're telling us, no, they haven't actually seen a whole lot, real escalation. They've just had some of the more of the same run of the mill, easy to push off, easy to deny sort of attempts, if you like, which we just was business as usual.
Okay. There's obviously a deposit insurance scheme that's been in the works for a year or two now. It's not scheduled to be fully implemented until 2023. Just wondering, what are the chances this could be brought forward?
Well, the scheme to be finally implemented requires legislation. So obviously, in a critical sense, it's the government's decision as to when they would want to introduce that legislation and be able to do so. We've obviously got an election coming up. We've got parliamentary processes around that. What we've indicated is that we are working on being able to be ready to introduce legislation if the government wish to do so. Now, there's always a bit of a challenge if you do it before you do other pieces that fit with it. The whole phase 2 reforms, in a sense, are a package, and ideally, you have a number of things that are such as our financial regulation responsibilities being well defined, which is sort of part of that phase 2. So, doing part of the legislation ahead of the others is a little bit more complex, but it could be done. And what we're doing is preparing advice and getting the minister and cabinet prepared if they wish to move at an earlier date.
Have you advised them that they should move earlier?
We've really just been in the discussion of optionality, and so it's been a bit of consultation with the industry. I mean, just examples, there are practical things like, how would you pay the money out? The whole idea of the scheme is to support depositors if their institution failed. You want to get them the money so they can actually pay their bills. You sort of got to get ready to think, what's the mechanisms for that? We don't have enough institution that would run the scheme as yet. So, there are those things. You've got to make sure you know what's covered by it, what forms of savings are covered, etc. So it's really just getting those options well developed for discussion with the Cabinet.
Back in March, the Reserve Bank put a whole range of regulatory initiatives on ice, basically, for the duration of the COVID-19 crisis. However, the Financial Stability Report says that climate change continues to be a priority. So I'm just wondering why that one is still being worked on, I guess, and the others aren't, and what can we expect to hear from the Reserve Bank on climate change, and when might that be?
Well, it's very timely you asked that, because the Governor is actually speaking about that topic tomorrow night in a webinar with the former Governor of the Bank of England, who's now the United Nations Climate Commissioner, and somebody else who I forget. But it is in a webinar tomorrow evening. Look, the bank is continuing its work with the international community on how we build climate change risks into our supervisory activity, and how we work with the institutions to understand and be alert to how climate can happen, risks could eventuate for the financial system. Also looking at in a sense, financing instruments that could potentially help with adaptation with change, green bonds and so forth. I mean, climate risk is one of those things that it sort of builds slowly, but it could suddenly hit you at any point, and not unlike the surprise of other things. You want to be prepared, really, and that's what we're doing. It's not urgent today, but if we don't do something, it will be. So we've got to build for it.
The Financial Stability Report also notes that there are 2 anti-money laundering, countering financing of terrorism matters under investigation. Just wondering if you can say whether these relate to banks, non-bank deposit takers, or insurers.
Well, they do relate to the financial sector. You're correct. Look, I'd probably rather not identify the sector at this point, the subsector at this point.
Okay. Look, thanks a lot for that, Geoff. That's Geoff Bascand, Reserve Bank Deputy Governor and General Manager of Financial Stability, and I'm Gareth Vaughan at interest.co.nz.